Pierre, how do we start?
Look, I've been in Nigeria for hours, 3 days. So I think that combined with the fact that I'm Swedish and have been in this industry of ours for many, many more years than I like to remember, probably give me a license to say a lot of things.
Yeah. Yes. Well, yeah. And welcome to Nigeria, of course.
Thank you.
It's very exciting with what's going on in insurance in Nigeria. We, thanks to the federal government and the president of Nigeria, and more specifically the regulators, NICOM, there's been a new reform policy called NIRA Act 2025, which was signed by the president a few weeks ago, and we're very, very excited about it. And I wanted to ask you to begin with, have you heard about this NIRA Act? And what are your thoughts if you have?
Look, it's extremely dangerous to rock up in a new country with a whole row of regulators in front of you and say, hey, I have an opinion about your regulation. Yeah. But I can tell you this, because I work with investors, I work with incumbents, and I work with startups and scale-ups, which are all very different constituencies. And I work with millions of consumers. Yeah. I can't help being here for a few days without just smelling the tangible opportunity. The opportunity to serve hundreds of millions of consumers in a different way, and the opportunity for providers of capital and for entrepreneurs. Because if you don't square the circle across all three, we need to protect the consumer, we need to give the consumer access to innovation, we need to give innovators a space to innovate with some grown-ups around, and we need to create the interest among the people that provide the capital to actually provide it. It's the outcome of regulation for me is to find the sweet spot between the three. We need a space where incumbents can thrive next to startups and scale-ups. And there's actually not a tension between the two. We're growing the pie, which is what I heard the other day, which is very telling. Actually, if you look at Nigeria from space, you just look at this and look, there's many boardrooms in South Africa looked at this and said one of the biggest insurance opportunities on the planet, and they're here for 10 years and run back with the tail behind the legs, yeah? Because it's a different market, it's a different dynamic. But it's obvious that there is an opportunity. But the current products, the current distribution models, the current economics is not going to meet that opportunity. And I think the regulatory signals that I hear, even the informal conversation, says that there is a real commitment to squaring these circles.
Yeah. So let's delve deeper into this. We are very excited about the NIRA Act. We can see that insurance companies are all excited. They're all capitalizing right now. But I want us to delve deeper into the Act, specifically with respect to technology. As an addendum to the Act, InsurTech guidelines were released. Within the Act itself, there are clauses with respect to data interoperability, digitization, etc., etc. So we'd like to get to understand from your perspective, since you've had almost 30 years in not just insurance, but InsurTech, Behaviour tech, etc. What are the opportunities that you see from your perspective that we can potentially take advantage of in this market, especially with respect to the NIRA Act?
Look, there's a couple of competing objectives here. So the products we have today that we take to the market, we need to use technology and AI to do that better. Okay. But actually consumers don't buy insurance. It's a grudge product. They buy a solution to the need in their life. Yeah. And if we're going to continue to sell insurance, which by the way, globally, insurance is sold, not bought. So for a long time we created, and I've been part of this, a whole ecosystem that actually is all there around intermediating and getting products in the hands of consumers. Yeah. For very good reasons, those are stable systems. Yeah. They are outdated. In parallel to that, we actually need to innovate. And we need to create an environment where that innovation can happen. I have no view on the specifics of your act. Okay. But protecting the consumer and making sure that millions of people that put faith in the industry, the day that they ask for a claim, that they get that claim paid out. Quickly, with no fuss and no buts. Yeah? That's critical. And that is a regulator's job, and that's a grown-up in the room. Yeah. At the same time, the current products are not good enough for these consumers because they seek something different. The regulator's job and the industry's job is also to create the right environment for very rapid innovation that requires sandbox-type environments, which I hear that you are putting in place, yeah? Where we can play with small sample sizes of consumers, we can be in beta, and actually if something doesn't work, we don't do real harm, yeah? But if you blend the two, we have a problem. And if your regulation creates that pathway, if you allow me, the third part of regulation is consumers do not buy banking, insurance, telco, and retail products anymore. The consumer sits atop this. And actually in South Africa, and I'll share this with you later, the game is out, yeah? It's dominant platforms, particularly in South Africa, is Capitec and Shoprite Checkers. One came up over food, other one came up over banking, yeah? Capitec is 25 years old. They sell more they have a bigger book on funeral insurance in South Africa after 2 years than Metropolitan, where I've been on the board, had put together in 125. All right, their production cost for that funeral policy is 1/3 of Metropolitan's. So they give real value to those consumers. That needs to be regulated and protected so when they have a claim, that gets paid out. Yeah? Squaring this circle is what this is about. And if you do that, given your market and the size of your population and the fundamental need for solutions, there's going to be greatness for consumers, greatness for the company, greatness for entrepreneurs, and greatness for investors. If you screw up any of those, nothing's going to happen, and we're going to continue with the old products we always have.
Let's delve deeper into this because this is really very interesting. The way I could just summarize it is distribution power and a platform play. And I think it would be great to get a sense of how you think insurance companies can be prepared for this new revolution, especially when you're saying here that legacy distribution and intermediaries like brokers and agents might not be able to compete with this new form of distribution, that are transactional, have a brand relationship with the customer, are data rich. So how can insurance companies prepare themselves specifically for this opportunity?
Look, this is not a popularity contest, so I'll try to answer that question. All right? The insurance companies that we have today are providing a service. They have made commitments, they have contracts with the customers. They will be fulfilled. This is not an industry that's going to disappear overnight. Yeah. At the same time, the platforms that I'm talking about that I will share with you later, they're actually not distribution platforms. They are solution providers. Yeah. And they are extremely good at providing very specific solutions that gives consumers utility at very low cost. So think about them as a Capitec can solve 100 needs for consumers. They are in South Africa. The departments of home affairs, bless them, are terrible at producing the papers that people need for their lives. Marriage certificates, death certificates, ID books, etc. Yeah? The players, like the platforms in a place like South Africa, are starting to provide those solutions because they're uniquely equipped to do that at low cost and low scale. They might not even charge for it, but by providing it, they create real stickiness and they make people come to the platform. Trust is central in all this, particularly with insurance, because I'm paying a premium for an uncertain outcome later. I need to know that you're going to be there when I get there. That is paramount, yeah? And in South Africa, Capitec is trusted, Shoprite is trusted, and they've got a virtuous cycle with more and more coming to them. They will manufacture insurance. They will turn to the current insurance companies and say, I will buy your product on a white label basis, and you need to produce it at half the cost you produce it today. That's how the game is changing. It's not going to happen overnight. But the magnetic forces at play here, yeah, are very tangible. And we'll chat about it later because I will show you how it works.
Thank you for that. Let's segue a little bit. And I want to go into the POS industry for a minute, and that's the point of sale industry in Nigeria. According to SANEF, which is a government agency that facilitates and or supports the point of sale service industry, nothing less than 20 million Nigerians are employed or are benefiting from POS transactions in Nigeria. The president of Nigeria is very specific about job creation. And NICOM, in partnership with CIIN, have been working on programs to enable the agent network in Nigeria. There's actually a 1 million job program right now as we speak in partnership with the Ministry of Youth. From your experience, can you talk to us about how we can leverage our human capital capacity with automation and AI to really create value in the insurance industry?
Yeah, and we will talk about this more later. There's almost a fear in the air that AI and technology is going to replace human beings. That is completely wrong. It is augmenting us. And our fear is holding us back from what is virtually unstoppable. It will not replace a broker, because human beings need a broker. But I do not need a broker that does all the bloody paperwork by hand and shovel files around, and I pay for the admin cost of that. I really don't need that. I don't need a broker that provides the same advice to every client. Yeah. The things you're going to see, this sits in the hybrids. And I'll answer your question. And I can speak straight from the mass market in South Africa. I work a lot with retailers. Retailers, by the way, the difference between an insurer and a retailer is that they sell can of beans and they have a margin of 2%. Yeah? And if they got a shitty quarter, they're in trouble, right? Life insurance and even short term is much more stable and much less volatile. So these guys live with very narrow competitive edges. And you see retailization partly of insurance in South Africa, but certainly of banking already. It's already happening. Now, in the mass market, where trust is becoming more and more important. So I do a lot of research into mass market in the townships in South Africa. 18 months ago, up until 18 months ago, the consumer trusted until you prove them wrong. Now they distrust until you prove them that they can trust you. So business models needs to have trust creation embedded in them. It's very hard to do without human beings and technology. So absolutely field forces that work out in poorer communities and lower income communities that actually sell insurance with trust solutions embedded in it will create lots of employment. Yeah. But what's going to go away is people that sit in the back office and move paper from A to B to C, and it takes 3-4 weeks to process a claim, and the error rate is 25%. That's just not sustainable. Yeah? That is not protecting employment. That is actually harming the consumer by doing it in the wrong way. We need to embrace this. Yeah? We will not replace human beings. I just can't see it. And the irony is, the better the tech becomes, you will all have seen deep fakes. Yeah? The better the tech becomes, the more creepy it becomes, and the less I trust it. But it's becoming really, really good at doing stuff for me, but I get more and more creeped out. The winners, I believe, is going to be business models that combine in very clever ways technology, AI, and human beings. But human beings does the stuff that matters. Yeah, you come to me and you recommend me as a broker. There's 4 policies you can choose between. I'm not going to trust the machine which one of the 4 to choose. I want a person to do that. And I want to know that I know him and I know his family and that he's going to be there next year when the claim comes. Yeah, because that's where I'm going to go. Yeah, good kind of Swedish style, right? So I don't have fears here. And I see this innovation here, right? But we got to, I mean, you spoke beautifully, but we need to unlock this energy, right? And regulators needs to help us to work across the silos, because the solutions don't give a crap about the silos. They're looking at human beings, and those solutions are not going to reach 100 million people if they cost $10 to deliver per transaction. They need to cost 10 cents per transaction. That's the magnitudes, right? And you'll see when I present yesterday, because one of the biggest choices you have today, is this real now or is it not? Because I met some fantastic people yesterday that heard disruption is coming every year for the last 20 years. But it didn't really. We still do back office with papers, right? My argument is, you better watch out, this is real. Yeah? And it's real now. Yeah? And I'll give you all the examples because I'm in it and I'm investing in it. Yeah? But that's your biggest question today, is it real now? And how do you respond if it is? Because then the rules get rewritten right now. And if not, we can gradually handle this disruption.
Thank you for sharing that. The way you summarize it, AI cannot solve for key human values: trust, integrity, leadership, empathy, love, relationships, understanding. These values that are culturally relevant in our markets. That community leader that can go and meet that market woman and say, you know, tell me about your plans. What are your vision? What are you trying to achieve? I believe that this insurance policy is going to help you get there. AI is just more of an enabler to resolve the operational bottlenecks of insurance.
Yeah.
You know, and I'm going to segue again to something else. According to the Nigerian Lottery Trust Fund, 14 million Nigerians bet every day. Not my words. You can Google it, everyone. 14 million Nigerians, and the average betting is $15, $10 to $15. You can Google it. And what that tells you, betting is risk-taking, you know, and insurance obviously is an element of risk. And I want to delve into behavioral economics here, okay, because this is something I'm quite passionate about, and of course you are. Why is it that organically betting works from your perspective, okay, but insurance doesn't?
I'll tell you what I think. Betting sells hope. Insurance sells a product. And the way the human mind works, I rather buy hope than I'm trying to protect myself against an event that I might have a positivity bias. It ain't going to happen to me anyway. I kind of know that I'm going to die, but I don't know that I'm going to have that traffic accident tomorrow. It's a fundamental disconnect. And actually, if we're going to be really harsh on regulation, I think that's the end we should start. And the other signal that you're getting out of this, it's not actually to seek protection in life. And I don't mean disrespect to people who have very little money, yeah? But I can buy tobacco, I can buy alcohol, I can buy betting, yeah? Actually, I can buy the protection I need. We just have not given them the right solutions. I will put the onus on us, yeah, to give an alternative to this. The other thing is, it's beyond hope. So if I live a life that is at the rough edge of things, I'm looking for entertainment. I'm looking for something to spend my time, streaming, YouTube, gaming, whatever it might be. We need to create the same experiences and think about our solutions and the products sitting next to these solutions.
Yeah, and I want to delve into that a bit more. I know we don't have much time, but essentially, betting it solves the optimism bias aspect of behavioral science. Whereas with insurance, it just seems like it's pessimism bias in a sense. And maybe one of the challenges that we have is framing or positioning from a product development perspective to bring or to communicate and to bring hope, you know, and bring a sense of investment and gain as part of the product that we actually build. We don't have much time, and I think I want to delve into the last aspect of our conversation, and that has to do with capital. As you know, I mentioned, the NIRA Act, insurance companies are going to be capitalizing, and it's good to know that quite a number of insurance companies are already well capitalized, and another group of insurance companies will probably raise capital. But capital is going to be a huge game changer when it comes to insurance penetration. Why don't you tell us a little bit more about your experience with raising capital in the insurance industry, because you've had some experience, and what we can learn from your perspective about capital raise, especially when it comes to InsurTech, which will be leading innovation, but also with the traditional insurance companies.
Look, so I have no sympathy for a scale-up or an insurance company that says I shouldn't be forced to keep an appropriate regulatory capital when I look after millions of people's funds. Yeah, what is reasonable, I'm not here to have a view on. What I'm seeing in South Africa and what I'm seeing in other markets is a decoupling of the whole value chain. Yeah, So if you go back when we started insurance 125 years ago with Scottish widows, yeah, all the way up until we do it now, the reason insurance company is organized in the way it is, as an almost fully integrated business with a very fragmented distribution side, is because of scale economics. You need a proper passes, you need a proper admin systems, and you can only do that at scale. And it made a lot of sense to integrate that. That's why we have the tech stacks that are 30 years old or 50 years old. It's for very good reasons. What's happening now is that whole value chain is getting broken apart because it can be. Okay, so I'll answer your question. And I think the capital provision and the backstop behind the products is a scale game. And you've seen it in asset management because of regulatory needs and because of the cost of research, etc. Yeah? The critical mass of an asset manager globally has just increased and increased and increased for decades. The same is going to be true on the product provision side because we have to protect the customers. There has to be enough capital in there. Yeah? And then the capital requirements and the returns needs to be sufficient to attract that capital. Otherwise, it's back to the government as the last resort. It has to be made attractive, but it needs to be bulk. I really struggle with funding startups where they need to go and raise regulatory capital and they're going to manage this and they're going to have passes and they're going to handle compliance and everything else. That's a scale game. They should work at the solution side. And we should decouple the capital provision from the solution, which often is bundles or banking, insurance, credit, whatever it might be. Yeah? And I think inevitably this is where market force is going to move us. And there's going to be less tension in the system, and if we can dance with the regulators all the way through to that point.
Yeah, according to the African Venture Capital Association in Nigeria, $2 billion have flowed into venture capital-backed businesses in Nigeria over the last 5 years. Only $20 million has gone into InsurTech. So I think one of the things that we have to do as industry players is to solve for that. How do we facilitate capital? Because talent will move to where capital is, and talent will determine the performance of any industry. So to wrap up, is there anything else you want to share with our folks here? Anything else before we close?
Yeah, look, I appreciate, because you don't really have a choice to have to listen to me because you're there, I'm here, right? So the AI and technology disruption we are seeing are equally hitting venture capital. So it used to be, when I sat down with venture capitalists last year, it was all about what's the growth plan and what's the sustainable. Now, it's what's the moat. And how can you build this proposition at 1/3 of the CapEx because of these new tools? So it's panic in the house on the venture capital side, and they all pretend otherwise, yeah? Because their business model is also threatened. The time when you build a relationship with founders, you're trying to find the winning founder, and you cross-subsidize the 9 that didn't work out using funding in that way. That doesn't work either. So there's changes here. And I think we all need to acknowledge the incumbents is being challenged, the scale-ups and startups being challenged, and so is the funding side. Yeah. Actually, the big gainer in this so far is actually the consumer. Because they're getting better and better solution and better economics. In South Africa, that's certainly true. It is the reward schemes. One retailer CEO last week said, we got the whole population addicted on this crack cocaine of fantastic reward schemes. We're just giving them more and more and more. It's trapped us, yeah. The consumer gains enormously. So they're getting these solutions, yeah. But underlying is it's a tension in the system, yeah, including inside banking and inside insurance.
Thank you, Pierre. I think the last thing I'll just say is tell your folks in South Africa, get ready. Nigeria is coming. And in the next 10 years, I expect that we will be buying and investing in other insurance companies in Africa and in South Africa. Get ready. Thank you very much, everyone.
Thank you.
Thank you. Thank you, Pierre.